The technical strength in Evolution Gaming contains more than first meets the eye. Here are the hidden signs of ambivalence and weakness that you need to know about. We have a very interesting spot in Evolution Gaming, one that further supports our recent discussions on the overall technical ambivalence with regards to the index closing in on its all-time high. For the interesting part in Evo is that the stock looks strong at first glance, but as we scratch the surface, the technical picture begins to gloom. If we begin by quickly looking at the OMXS30 daily graph, we can easily detect that this whole rally since the March bottom has been fueled by technical weakness and doubt. For contrary to what the price action may tell us, this is not a power ride. The RSI is still within its bearish channel, and this entire move breathes of fragility. This on its own is a major sign of weakness that must be broken if it were to have the powers needed to make any significant and, most importantly, sustainable move up. For if the index cannot find the energy to push above with determination, expect it to function as a massive glass ceiling for pretty much every stock around. And just like the index, Evolution Gaming too gives off a lot of mixed signals, some bullish, some bearish, and some things are more than first meet the eye. And as we proceed to sum up the technicals at the end, we get a pretty clear and coherent overall picture of Evo's situation. But first, not financial advice, and if this episode helps you get a nuanced understanding of Evo's current strength level, then please like, share and subscribe. That helps others find this content too. Now, at first glance, Evolution visually appears to be forming a bull flag. Naturally, this is a sign of strength, and I'm sure many of you have noticed this pattern already. However, as we dissect it further, we notice that the trading volumes have gone up. What we typically want to see in a bull flag, or in most bullish continuation patterns too for that matter, is a decrease in trading volume. These two sell-off candles in particular are a bad short-term omen that contradict a breakout to the upside. And even if there were to be one, this on its own may very well restrict the extent of such move. Moving on to the RSI. The RSI looks strong, especially on the weekly chart, at which it is hovering around between the upper bearish blue and the upper bullish red line. And every recent dip has been solidly supported by the green RSI line on the weekly and the green and lower bullish red line on the daily. This is exactly what we want to see for continually increasing prices. And 1 and 3 months ago respectively, we got a clear lower bullish red touch, each at the local price low, upon which the stock took off by 15 and 35% respectively. For more on these RSI strategies and terminology, please watch the RSI trilogy. But if we again pull out the magnifying glass, it's not all sunshine. For we have a long RSI divergence on the weekly, one that stretches all the way back to mid-February. Put simply, what this means is that the price increase has been fueled by less and less purchasing power. Evo may certainly still have more to give on the upside, but in order for it to be a healthy and sustainable progress, it needs to regain its RSI strength. And this is a must. It is non-negotiable. For I know a lot of people adore this incredibly impressive company, but I'm also certain you don't want it to go fingerprint cards on you. But to be perfectly clear, what we're looking at today are the short to mid-term technicals, nothing else. And those technicals perfectly reflect the ambivalence, uncertainty and doubt of the index. And as of producing this, the daily RSI is teasingly close to the upper bearish blue from below. We do not want to see a close on this, just like we don't want to see a close below the green RSI on the OMX. The last time the RSI made a clear close on the upper bearish blue in Evo was in late August at the local top, upon which the price immediately rolled over some 15% at most. And lastly, the price took out a new all-time high, yet didn't manage to reach the initial 1.618 fib target. For normally, prices are attracted to fib targets like these like a magnet, although that doesn't mean it must go there at once. And what happened in this case is that the price got rejected at the 618 fib between the previous all-time high and the 1.618. This rather supports what the long RSI divergence is telling us, namely that the stock is running out of power. On a good note though, the price is currently retesting the horizontal support from the previous all-time high. But if this level breaks, and especially if the OMXS30 breaks below its ascending channel, EVO might go down fast. So what then are you meant to do with this information? That of course is entirely up to you. My only goal is to objectively present the technical dynamics between the buyers and the sellers, as well as the dynamics between evolution and the OMXS30 index. In that sense, the moral or message is rather that the upside in EVO might be limited until the index has made up its mind and regained some real and sustainable strength by taking out a new all-time high at heavy trading volumes. For as a swing trader or market participant in general, you want to get the best bargain on your entry price as possible. Sometimes the risk to reward is great, sometimes it's not. This time it isn't. For if the index were to roll over for a 5 to 15% correction or more, do expect evolution to be in for a nasty surprise. The technicals sure support such unfolding in the short to mid term, just like the strong trend supports a continued move up if only evolution can regain the power momentum needed. That was all for now, thank you and goodbye.